Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, September 26th. Also, today is the Fed Day, so we'll jump right into it. As you can see here with the FOMC, that is the big thing for today's news, and that is because the Fed is wrapping up their two-day meeting that started yesterday. Today, they will be giving out their announcement. Investors will be glued to their announcement today. So they are expected to raise rates by 0.25%, which will be the third time this year they've done so. And then for December's meeting, there's about a 75% chance that they'll raise it again. So what investors will be looking for is they're going to see with the whole trade talk, what's the Fed's feel or gauge as to how the tariffs may place or a possible trade war may uh, affect the U.S. economy and stuff. Because right now they're kind of ignoring the trade and they're kind of looking at the fundamentals, how strong the fundamentals are, the jobs, corporate earnings reports and such, that they want to see how this possibly could gauge what the Fed's feel is on it. And then, of course, they want to look at the dot plot, which is going to show the amount of uh, possible rate hikes for not only by end of this year, but end of next year, too. They want to kind of get a gauge as to how many more rate hikes they think the Fed will get. Get to what they feel is a neutral policy and get out of this accommodative policy that they've been kind of in for quite some time here. Also today on the docket is we got the new home sales for the month of August. So as you can see here, in July we had 608,000. This is on annualized pace of sales, 608,000. So the forecast is supposed to be 625, and it actually exceeded that forecast to 629,000. So very good news there. Kind of welcome sign to see that we're getting some at least some sales in housing, but it looks like because we have such shortage on the existing home sales, we're kind of relying more on new home sales to kind of boost the overall sales in real estate here. Let's kind of jump ahead here to the whoops, sorry about that, to the headline news. And stock market is up. It's not The markets aren't doing a whole lot this morning so far, probably because they want to wait for the news, the Fed, so they don't want to get too far ahead of themselves, so they don't want to go too far low or too far high, but they are just up a little bit here. And of course, tariffs are still on their minds. It was just on Monday when they implemented the tariffs on China, implemented tariffs on the U.S. as we implemented tariffs on them. And yesterday they were accusing us being bullies, basically, and trying to create some type of Buy American type of mantra. So either way, we'll have to kind of wait and see how this plays out. But for a long time, the U.S. has been the one, as we see with our trade deficits, the one that's been losing in all these battles. So it's interesting to see somebody actually stand up and try to do something about it and see if we can get some at least a better level or a more level playing field here for our businesses. So let's kind of jump ahead here, see how this is affecting the bond market. Bond market is coming up a little bit. As you can see, we did touch off the floor of support yesterday. It's been a pretty strong floor of support, which has been helping us. But we're also in this long period here as a oversold position here. So we are poised to make an upward trend at some time, and we just need that spark, which could be today, with the Fed hike that could help us out. But if the Fed talks about high inflation or anything of that nature, that could ruin that for us and further decline more, because bonds obviously won't like that, as inflation is the enemy for all for bonds. Let's jump ahead to the, oops, sorry about that again. Here's the 10-year Treasury. Again, this is kind of an overbought position here, and this has been hovering up here. This floor of the ceiling of resistance has been kind of holding it intact. We're down about 1 point, so from 310 we're down to about 309 right now, and that's pretty much about it. So rates possibly could get a little bit better today, but right now it'll be a little bit mixed from where we left off yesterday, as we're down about 9 basis points. Now we're up about only about 9 so far today. So for the most part, our rates are about the same as where we left off yesterday, but we could get a pricing for the better if, of course, they like the news from the Fed. That could be a market mover in of itself right there. And of course, or this might play out more tomorrow as well, as after they've had some time to really kind of absorb the information that's being presented to them by the Fed here. So that pretty much wraps things up. If you guys want to get any market updates, just come over to Twitter. You can follow me at Twitter at Mike Bjork. I do post throughout the day there. You can get any change in the market updates on there as well. You guys have a great rest of your day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye.